Hello everyone and welcome to today's morning report on Friday the 8th of July with me, Richard Perry, market analyst at Henson Markets. It is non-farm payrolls Friday and we've got a little bit of caution, although it's actually slightly improved from the open. Equity markets in European session just opened slightly lower, but they've now sort of just gradually pushed a little bit higher. That's come as the oil price has rebounded. The oil price was sharply lower yesterday. Let me just show you what we're talking about on the oil price. That's the dollar. Talk about that in a bit. But here's the oil price sharply down and actually broke below the 45.83 level, which is the medium-term support on WTI. And that came on the back of the EIA oil inventories, which were still in drawdown, but not as much as perhaps the market had been expecting. So the market sold off quite strongly into that data, or in the wake of that data, I should say. And subsequently, Wall Street closed lower. Asian markets then were lower overnight, but just minor rebound in oil today. Interestingly, just pretty much back to the neckline, isn't it? Of that breakdown of what I think is a top pattern now. 45.83 is that resistance, 45.54 currently. 45.76 is the high on Reuters. And that sort of rebound in oil has helped to sort of drive a bit of a rebound in equity markets. But generally speaking, markets are pretty cautious. You're not really seeing too much of direction ahead of the payrolls report. You've got the dollar slightly weaker. Nothing too significant, but just slightly down from yesterday. But generally speaking, sort of pretty much consolidating in front of this payrolls report, which is at 1:30, I should say, today. Expectation of 175. I have the data. Expectation of that's unemployment, of 175 of the headline payrolls. Now look at that, 38,000 last month. That was the lowest since 2010, I believe. Yep. But that's expected to be revised higher, so ultimately that won't be the lowest since 2010. But still, the expectation of 175 is at 1:30 today, and also we've got unemployment, which is expected to tick higher to 4.8%. I'm presuming, I don't get forecasts for participation rate, but I'm presuming that's because they think that the participation rate is going to improve slightly. When the participation rate is improved, that suggests more people are looking for work. Subsequently, more people are out of work, actively looking for work. So the unemployment rate is possibly going to rise to 4.8%, and the main factor again is going to be the average hourly earnings to plus 0.2% on the month, which would be plus 2.7% on the year. Now I've got a non-farm payrolls webinar today. If you want to join, go to the website and sign up. But that starts at 1:15 today, so it's going to be just about half an hour over the report and see the reaction of the report. So come and join me then. But that's pretty much all the data that we've got to look forward to today. So what are we doing in terms of my chart today? Well, Euro Yen is my chart of the day. And Euro Yen has been falling in the last few days. Let me show you the daily chart first of all, sorry. And the expectation is that it's likely to fall away. I mean, Wednesday's candle was pretty, I mean, you could argue almost positive, although that wasn't a positive bull hammer, where the price actually closed lower on the day. But yesterday's, again, just the selling pressure resumed, didn't it, really? And to be honest, it's pretty much flat ahead of the payrolls report. Couple of ticks higher on the day, but I think ultimately you look at these momentum indicators, still very negative. And you think about Euro Yen and the fact that the yen is basically the market safe haven currency of choice. The euro is under pressure on the back of Brexit, so that pretty much all adds up to continued weakness on Euro Yen, I think, in the coming weeks. Certainly, if this whole Brexit situation starts to or continues to deteriorate, I think the market's going to move towards safe havens, and that will be Euro Yen sharply lower in that case. But certainly the momentum indicators are all pointing towards that RSI just below 30. It's historically got to the low 20s in these selling phases of January and February. Stochastics still further downside potential. Look at where they got in January, February, April, even June. So there's still downside potential there. So I think generally speaking, rallies are a chance to sell on Euro Yen. Here we see the hourly chart, which I zoom out. Broke below the previous low of 1136. 1078, I think it was. Yep, 1078 was Wednesday's low, and we're now into a phase of lower highs and continued selling into strength. Really, momentum indicators all negatively configured. RSI failing at 60. MACD lines rolling over under neutral. It's all pretty much set up for further decline and retest to 1078. Obviously, the payrolls report could have an impact if it's an improved risk report. Which would be a strong report, then the yen would be sold off on the back of that, and subsequently euro yen would rally. So maybe that rally would give you another chance to sell. You've got resistance around about that sort of 112.60 area, which it likely to be sort of where we see a rally into on a payrolls report that's quite strong. So 112.60, maybe 113.30. It's which is where you start to see the overhead supply from the rally highs. But ultimately, I still think we've got further weakness in this chart, and I think rallies will be seen as a chance to sell. So I wish you good luck in your trading for payrolls and euro yen today, and I'll speak to you later.